Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. There is so much, and I mean so much stuff going on in the world of precious metals, which is intertwined with the massive amount of controversy and chaos that's happening in the economy. Precious metals prices are influenced by what's happening in the economy, the strength of the economy, right? When the dollar index is rising, gold and silver goes lower. When the dollar index is lower, gold and silver goes higher. But it's not only just the dollar index. It goes much, much, much farther beyond that to silver's industrial uses as gold and silver as a monetary, as a store of monetary value. With the Fed overspending or boosting these trillion-dollar stimulus packages, precious metals are heavily influenced and intertwined in the economy. From an investing standpoint, from a political standpoint, and from a perspective. If people base silver's price off of speculation, how much will that actually factor into the price of precious metals? That's something I always bring up in my videos. Stock markets, Bitcoin, cryptocurrency is based more off of speculation. Gold and silver have intrinsic value, so there shouldn't be as much speculative value in these assets, but there is, especially nowadays. And this article is talking about how the gold and silver markets have changed, and what about you? This is going to put a twist on things, because how silver stacking was back in the day isn't the same nowadays, and sometimes we do have to adjust. Now, I hate to say it, but sometimes it might not be for the better. I don't like that there is more speculation than ever in precious metals. I want supply and demand to base, or to be the biggest factor, and it still is, but there's definitely a lot of other things influencing the price of silver and gold that we may not agree with, but we have to adjust and adapt, or we're gonna get bit in the butt. So the 2011 to early 2019 precious metals bear saga was broken only by a 6-month bull hiatus in early 2016, which then gave most of the rise back over the next 2 years. Now, in spite of some very powerful evidence to the contrary, the general investing public still questions both the validity and the upside potential of physical precious metals and the share prices of producing miners. My premise today is that the physical gold and silver market has fundamentally changed, and if you intend to gear up for and stay on this evolving multi-year historic run, you had best do the same. So he's saying you better change with it. We tend to spend a lot of time looking into the rearview mirror, especially when under duress. Connected to this is something psychologists call the recency bias. This simply means that what has happened in the near to intermediate past tends to inform and influence us as how we should behave in the future. The 2011 to early 2019 precious metals bear saga was broken only by a 6-month bull hiatus in early 2016, which then gave us most of the rise back over the next 2 years. Now, in spite of some very powerful evidence to the contrary, the general investing public still questions both the validity and the upside potential of physical precious metals and the share prices of producing miners. My premise today is that the physical gold and silver market has fundamentally changed, and if you intend to gear up for this on this evolving multi-year historic run, you'd best do the same. Significant increases in demand, especially in the West, tend to begin subtly with large purchase and storage by high net worth individuals. Over the last year or so, gold and silver ETF share inflows, which are supposed to be backed by growing amounts of metal, have been surging, setting monthly record highs time after time. In just the last 2 years, silver bullion held in trust by these ETFs has risen from a 22 million ounce loss in 2018 to a 81.7 million ounce gain last year. So a negative 22 million ounces to a positive 81 million ounces, and ETF holdings are still marching higher. Ounces vaulted under the SLV, which, and by the way, we're talking about 81 million ounces higher, and we have a silver shortage on our hands, right? A diminishing silver supply. Ounces vaulted under the SLV, which holds almost 1.5 the silver owned by the world's ETFs, is published daily and has become a must-follow item for speculators and investors alike. As such, the trust's mission of mirroring the metal's price serves as a proxy for silver investment demand. So, by the middle of July, as reported by Adam Hamilton, SLV held over 516 million ounces of silver. Adam believes that this current rise is caused by institutional investors, stating that this is near vertical holdings build has been highly consistent and disciplined. It has happened whether silver is rising, falling, or grinding sideways. And this is an interesting discrepancy going on between the amount of gold going into ETFs on record and the implied build taking place in other venues. These take form of private purchases held either by non-banking vaults, private storage facilities, or quite literally holes in the ground. So here is Track's implied vaulted gold build and gold ETFs cumulative change. In addition, central banks, probably the largest buyers of gold over the last decade, have become unremitting accumulators for all their public posturing about gold not paying interest, gold being a barbarous relic or a pet rock. They certainly have been doing just the opposite. And it's so interesting how the government, they say gold and silver is such a bad investment, but they own so much of it. It's because precious metals are a direct threat to the US dollar. So immortalized as the most profound exceptions to this have been when the start of the 20-year bull run, UK bureaucrat Gordon Brown managed to sell fully half of his country's reserves at an average price of $275, which turned out to be the absolute low of the of the previous 2 decades. Immortalized as Brown's bottom is farcical action cost his countrymen billions of dollars in lost value as gold rocked up to its current level of over $1,800. No doubt this will continue to be the gift that keeps on taking as gold adds more thousands of dollars per ounce. But the top prize of thinking backwards must go to Canada, which, although it is the world's 8th largest gold producer, holds next to nothing. Its puny reserves could probably fit on a sturdy coffee table. The large buying build in both gold and silver have reached the stage where individual investors are starting to realize that far from being a flash in the pan last spring, elevated premiums, long delivery delays, and difficulty in finding metal are all becoming the norm. My suggestion, expecting these trends to persist and become noticeably worse as we move into the fall months, typically one of the strongest time frames for both metals. In summer's the weakest, but we see all this rallying and all this potential and all this green. So I'm curious to see what's going to happen in the future. The biggest decrease in silver mine supply recorded history, going back to the 1940s, has taken place during the last 4 years, 2017 to 2019. And this was pre-COVID. As Jeff Clark notes, in 2019, only a single new primary silver mine came online anywhere on the globe. Not to mention that due to the pandemic this year, we can expect a further 10 to 20% production decrease. So here's the top 7 primary silver mining companies and mines and the average yield from 2005 to 2019. So you can see 2019 is actually the lowest. It's going down. It's going down, and this is the hundreds of millions of ounces. So a diminishing supply, but an exploding demand from 5G technology, from electric vehicles, from solar panels, it's only going to make the price go higher. So if you have yet to acquire enough for your needs, then you better get on the stick. Decide what your acquisition plan should look like and how much you intend to budget, what you should buy and how often you plan to do so, and don't fail and to do something about it, because you're going to be kicking yourself in the butt. So don't keep waiting for the low paper prices in hopes of getting some cheap metal. As investors with this mindset found out last spring, holding out for $12 silver simply meant they had to pay $22 as opposed to being able to just a few months over before to get it at $17, which included only a single dollar premium over spot. So don't be a zinc penny wise and copper pound foolish. Real money, gold and silver, unlike the fake stuff in your wallet, holds and builds value as counterweight to the ongoing depreciation we've all been experiencing in fiat currency purchasing power. And oh, did I mention that just since 2000, those paper promises you've been collecting have declined in value by over 44%. As for gold and silver since then, try working out the math on the scratch paper with these statistics. Gold in 2000, $265. Today, $1,863. Silver in 2000, $4.75. Today, $22.37. On the way for both over the next few years or so, fill in the blank. See, money comes in all shapes, forms, and sizes, but real money is something that cannot be created nor destroyed. Gold and silver have been used as a means for exchange or an exchangeable way of value for over 5,000 years. Fiat currency is an infant, a newborn baby into this spectrum, and it's going to crash. It's designed to crash. It's like trying to pay off debt with another debt. It's like trying to pay off a credit card with another credit card. We're trying to get ourselves out of debt by replacing it with more debt. It's just not going to work. You need the alternative, which is precious metals. There is no solution, but there are alternatives. So we must transfer our wealth into something that holds its value. Now, like I said, times are changing, and how the markets moved back in the day are not moving the same today, at different paces, different things influencing the markets. So you got to be prepared, and you got to move on and change with the wind. Now, I do think that supply and demand will come back. I still think silver's we will get back on track. We will get back to the basics, back to the roots. But sometimes, especially with very controversial things, speculation can come in and influence metals or prices more than usual. And I think that's what we're seeing right now. But anyways, I'm gonna wrap this video up here. If you thought this video was educational, informational, or at least just entertaining, make sure to smash the like button. Subscribe if you're new. I post daily videos, usually 2 to 3 videos per day. So definitely want to stay subscribed for that, especially with everything happening. You want to be informed on a day-to-day basis. That's why you should smash that subscribe button and also turn on post notifications. So anyways, thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.